The magnitude of the tariffs are known to almost everybody in terms of the scope, in terms of the magnitude, right? So, for example, when it comes to companies like Tesla, how do you know the extent to which they'll be hurt? They don't necessarily buy a lot from overseas, but yet Tesla is half of what it was 3 months ago, right? Is there too much fear and emotion in the share price rather than fundamentals? I think that's my question.
Firstly, I was never a big fan of Tesla, and a couple of reasons to that. Firstly is that the car makers usually don't make very high returns, right? And secondly is that you get a lot of...
Kelvin Goh, my, how time flies. I think the last time we spoke was during COVID. Easily, 4 years ago? I think 4 years ago?
Yes.
We did it remotely then, and we're going to do it remotely now. Obviously, you are the fund manager for Qualis Global Fund, but we've known each other quite a long time. You used to be ASEAN Head of Research for CIMB for many, many years, and of course, a bunch of other institutions at the time. I guess let's start with you just giving us a little bit of a rundown as to your background and how investing has changed since those days now, I think.
All right. Okay. Thanks, Ron. Good to be back on the show. And yeah, I have been doing this since I left CIMB. So almost 10 years. And what has changed since we last spoke was, well, we overcame COVID, and now we're in the midst of another set of challenges, which is the tariff war that has broken out before us. And I think what has made it more difficult is what's actually going through the heads of the policymakers in the US.
How are you reading the fear and concern in the market? Is it temporary? Is it situational? Or is it a great time to be buying right now?
It's situational because firstly, you like to buy when its market is dropped. But at the same time, we don't know what else the policy changes will have, what sort of policies will be thrown at us. So, for example, today the news just came out to say that the US is trying to get its allies to gang up against China. So, you're getting not just a unilateral kind of risk, US versus China, but US is trying to round up the other friendly countries to go against China. So that basically is, changes the game a little bit. So, and on top of that, the headlines keep changing on a day-to-day basis, sometimes on an hourly basis.
So we know that this Donald Trump, he's a lot of bluster and he's the man behind out of the deal. We used to think, or the market used to think, that he would scare his opponents into submission and then to get them to come to the negotiating table and then strike a deal. In certain cases, he's done that, but with the big trading blocs like the China, the ASEANs, the European Unions, he hasn't really done that. So I think that has caused a lot of concern in the markets in terms of how investors should position. What's your feedback?
Well, China clearly is prepared to fight it to the end, whereas I think the European bloc also is taking a more cautious stance, but is prepared, but a bit more cautious. But ASEAN, I think they are much more conciliatory. They are not looking to retaliate in any way, they're instead looking to negotiate their way out of this. Clearly, it depends on the size of the economies, but it's just, I think all eyes are instead mainly on how China will react to how this plays out.
So Xi Jinping came to Malaysia. Obviously, he's trying to solidify his relationships in ASEAN. So, I mean, really, I think, Kelvin, what I'm trying to understand from you in terms of, understanding how to allocate capital is, are you keeping cash? Are you strategically buying? What sort of sectors look interesting to you? What are beaten down that you're potentially, cherry picking? Those kind of things.
Yeah, okay. So keeping a bit of cash, but at the same time, I think switching out from the sectors that could come under more risk, sectors that are being weaponized, to go into the safer bets. For example, some of the staples, some of the more regulated industries where you have much higher pricing power, and also away from, and also into some of the other economies, some of the other continents which is facing less tariffs. For example, Latin America, right, as opposed to ASEAN, where the tariffs are a lot higher.
Can you get a bit more specific in terms of maybe segments or industries? Not even sure if you can mention companies.
All right, sure. So, for example, names like Costco, where American consumers will flock to in times of inflation, where a large part of their income comes from membership subscription. So that's a very safe and steady company to be in. On top of that, you have companies like MercadoLibre, in South America. That's e-commerce, and where e-commerce, not just e-commerce, but fintech, logistics, and that's growing in excess of 20% a year. And in fact, South America could be benefiting from some of these trade flows, where China is now buying some commodities from Brazil, for example, instead of buying from.
So how have you traditionally bought your stocks? Have you, gone into traditional names? Are you Mag 7? Are you more tech? Are you more North America? I know you're purely equities, Kelvin, but traditionally, where have you allocated your most of your capital?
Yeah, traditionally it has been largely in North America, a bit of Europe, of course, some of the big tech. But since then, I have pared down some of this exposure to the big tech because they're quite vulnerable to what's developing out there right now. For example, Nvidia, some of the semiconductor names, it's all being weaponized, right? Tesla, for example, I think there's just so much animosity towards what's happened towards Elon Musk. I think a lot of followers of Tesla have sort of abandoned him. So it's just a lot of potential risks that could happen, especially among some of these big tech names. And on top of that, the valuations have been quite stretched. They had a good run. So it's time to take some money off the table and redeploy them in areas that are less in focus.
I just want to get your view on this, Kelvin, because I think a lot of the selling has really been, sell first, analyze later, and then make a concrete decision a bit further down the line. Because the magnitude of the tariffs are known to almost everybody in terms of the scope, in terms of the magnitude, right? So, for example, when it comes to companies like Tesla, how do you know the extent to which they'll be hurt, especially in the context of their longer-term picture where, for example, there are quite a few S-curves in terms of their business profile beyond cars, right? They've got battery packs, they've got humanoid robots, they've got things like AI and things like that. So, I mean, they're potentially one of those hugely breakout businesses in the future. And I think that they do source a lot of their stuff from within North America. So they don't necessarily buy a lot from overseas. But yet Tesla is half of what it was 3 months ago, right? Can you explain that? I mean, is there too much fear and emotion in the share price rather than fundamentals? I think that's my question.
Yeah, firstly, I was never a big fan of Tesla. And a couple of reasons to that. Firstly is that the car makers usually don't make very high returns, right? And secondly is that you get a lot of competition out of China. Well, the technology, a large part of it also comes from China, especially the battery side of things. And when there's so many car makers in China emerging, the competition is just going to get very intense. And that's one, those are the key reasons why I've stayed away.
So when you get on the phone with clients, I'm not sure how often you speak to them, but what are they saying to you? What are their chief concerns?
Chief concerns right now is obviously how the world trade order will change, where tariffs will be thrown at which country, and where do you find a safe haven, and how do you invest? How do you redeploy? So I would play it safe and go into the domestic, the staples, where there's still growth, away from the escalation in trade war.
Is that enough to allay their concerns? I mean, you're telling them what they could already understand it from the news media, but when they ask you how are you allocating their capital or what is your strategy direction, how do you answer them?
Well, you just want to play it safe at the moment, right? Because you just don't know where the next curveball will be thrown at you. Why put the capital at risk? And unless you have a strong view as to when it's going to turn around. So
it's basically protect capital first, right? Obviously, that's rule number one in investing. Don't lose money. Least of all, don't lose clients' money. And then deploy later for better outlook on the markets. Do you have a segment or a set of companies that you would be willing to pounce on if and when the picture turns?
Yes, I think tech is always an attractive proposition. At the moment, I'm sort of holding back because you don't know how far this weaponization will go. And if there is some sort of clarity there, then we can then reconsider how to redeploy the capital.
So when you say tech is very broad, right?
All right.
So Mag 7, all 7 or several other 7? And then are you looking outwards to AI and other things like that as well?
Yeah, that's what I meant. Semiconductors, AI. That's, of course, a lot of restrictions being put in place. At the moment, software is not being talked about because it's service, not goods. But you don't know how far, where the retaliation will take place. But some of the software names, like for example, Amazon, they are just not just a software, but they're cloud. They also have e-commerce, and e-commerce is being affected by some of the tariffs and the decline in consumer confidence.
Well, in the meantime, capital's got to flow somewhere, right? And there was this, reported ebbs and flows of capital away from U.S. assets, away from T-bills, away from U.S. markets, and into emerging equities, right? Whether it's Latin America, whether it's ASEAN. What about in this part of the world, Kelvin? Southeast Asia, Malaysia, Singapore, those kind of places.
I think Southeast Asia is going to be very selective. I think some of the big markets in Southeast Asia also have their problems. For example, what's happening in Indonesia. It's not something that I would try to seek refuge in. They are also facing high tariffs from the US. If anything, money will probably go into cash or gold. Have you seen what's happening out there?
Yeah, gold is crazy. $3,500 an ounce now. It's done quite well. But I mean, they've been waiting 15 years for this rally level. It's finally arrived, right? What about things like the blockchain? What about things like this Bitcoin reserve thing that the U.S. government seems to be wanting to do?
Sorry, I don't have much views on that. I don't invest in that space.
Okay, so to sum it up, right, in terms of how you're looking at the markets, first of all, is to stay cash ready, keep powder dry, wait for the picture to clear, right? Is that number one?
No, I'm also invested, right? Invested in names like MercadoLibre, Costco, Dollarama in Canada, Constellation Software also in Canada. So highly emotive, large mode companies with where consumers will flock to where in times of high inflation and uncertainty.
Yeah, so obviously you would be invested, but the certain amount of cash being kept dry. Would you be able to say how many percent cash you're holding?
It depends on each portfolio.
Oh, okay, so how many portfolios do you have?
I think that's too detailed.
Okay, too detailed. Okay. And I think secondly, you are waiting for if and when the picture turns, tech would be and specifically software, right?
Yeah, I think the if and when the picture turns, of course, it depends ultimately how much each of these sectors have fallen and where value has emerged. So it's a bit too early to tell, but of course, some of the big tech will I'd love to revisit some of this big tech as the clarity when there's better clarity out there.
Cool. And I think just before we let you go, or I let you go, Kelvin, this whole AI thing, it seems to be, I think we're most commentators say we're 5 years away from complete Armageddon or complete La La Land, depending on how you look at it, right? And it's permeating every industry. So investment markets as well is where it's supposed to be reaching into agentification and, these are little robots running around investing on your behalf, doing your full profile and all that. How are you kind of like, positioning yourself for that, dystopian future or positive future, depends on how you look at it?
I think it's too far to look ahead. Ultimately, it still requires human judgment, in my opinion. Yeah, you can use AI to help you with analysis, to help summarize some of the transcripts out there, and to put together certain notes. But by and large, I would still be doing the bottoms up analysis.
All right, man. Thank you so much for your time. Hopefully, the next time we speak won't be in 4 years' time, like Kelvin.
And in more positive environment.
Yeah, but I mean, then again, some people say that fortunes are made in bear markets, right? So
Absolutely.
who knows? Who knows when the bottom has been reached? Do you think the bottom's been reached?
That's $1 million question.
Yeah.
It depends on how much. Well, we're certainly much closer to the bottom than we were a couple of months ago.
Hopefully.
It also depends on how far this trade war will go.
Touch wood.
Touch wood.
Okay, man. Kelvin, thanks so much for your time.
All right, thanks.
Take care, brother.
Bye.
Bye.